Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to the Tuesday edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing Monday. We are about to get rolling like we do each and every day here on the Daily Market Commentary, looking at the same 10 to 12 futures markets, identifying potential breakout and reversal trades from an educational perspective. For those of you new to the channel, do me a favor, click that subscribe button as well as the notification bell so that you get the alerts whenever these trades do, whenever these videos do come up. So let's go ahead and get rolling. ES, which is the S&P 500. So on the weekend edition, I had talked about a potential for a breakout. And so the ES, I didn't look at the ES for the breakout. We looked at the NQ. And we certainly got the breakout and then some on the NQ. So we've seen a really nice run on the NQ. If you were able to catch that, do me a favor, leave that in the comments below if you were able to catch that NQ move. Now, if you have caught that NQ move and you're riding it up, I would actually take a look at taking some profits maybe off the table up in this range because I think we've gone a little overextended. When I move this to a daily chart, we've gone a little bit overextended, quite possibly, and to the point where I think that we could get a little bit of a pullback, not a big pullback, but you don't want to leave money on the on the table. So I would be locking in some of my profits. Although, if you didn't get in, I think that we may get a little bit of a pullback and then rally again. There's no reason to say that we won't. We are, back into our more bullish mode, have been for a while now. But it's, I'm not looking for any short opportunities right now. I'm only looking for good pullback opportunities. Now, in the S&P, I think that pullback opportunity would be a bit higher, and I would have to come to about this region here for the potential for the pullback. So a little bit higher in this area here for an opportunity for a long entry on the pullback, but we got our brand new all-time high. So, if you're long, there's no reason not to stay long, especially in your longer-term investments, and just move your stop up as protection. Looking at crude oil, so in crude, we had a little bit of a move right through this area here. This was our breakout long in this area up here. I talked about on the live edition on Sunday evening about a potential if we broke below this area here for price to fall. It has not broken below that area to give us the entry, and so I'm still waiting on that as a potential breakdown from that area, although if it does break down, you've got this little area here to contend with, so just be aware of that area as well. Gold. Now, gold smacked us around a little bit. So we had the gold entry on Friday, and so we got a pretty nice rundown off of gold into Sunday. Now, the question would be am I willing to just take some profits off the table when I've moved 1-to-1? Some people told me that they got into gold on Friday and they don't hold things over the weekend, so you got a little bit of a profit. This one did eventually come up and give us the stop out. So depending on how you manage the trade, you may have gotten whacked a little bit in gold as that gold trade then reversed and came back north. So that's a little stop out in gold if you had taken that one off that level. If you're so inclined, based on our movement that we've had over the last couple of days, you might want to be looking somewhere in this region here for a potential re-entry on a reversal. I'm not going to draw the lines on it here because I'm not completely in love with it. There's nothing that makes me want to jump at it. But this area here is formed right around the London Open. It is an area where you could see a bit of a reversal. All right, looking at our bonds. So in our bonds, we had a breakdown below this level right here, and this was identified sometime last week, or maybe even was done over the weekend edition. Price broke down below this blue area. We've now seen a little bit of a run, so we've got a little bit of a run in the bonds. to kind of counteract any of the losses that we would have had in gold. And so that one's continuing its move. If you've already taken some profits off the table, I would look to take some profits off the table pretty quickly, or at least move my stop to break even, because we've kind of lost our downward momentum. So either take some profits off the table, move your stop to break even. At the very least, you've got about a 2-to-1 built in the Aussie. So we've not come back to our Aussie potential reversal area yet. That one I'm still kind of holding off on. I've got this little area here in the Aussie that I wasn't a huge fan of, because it's a reversal off of this little area here. And so that's why I didn't choose this area. I got an email about that. What's up with this area here? This area is technically still valid, but I think it could be a reaction off of this area here to the left, which was formed right at the market open. Market open levels are typically going to be stronger than any others, and this was U.S. market open. Yes, this was European market open, which is still important, but this was the U.S. market open, and we bounced off of that, which is why I didn't include it as a fresh, new area. So what am I looking at now? Well, what I've got now is I've still got this area up here of potential selling opportunity. And theoretically, we could have a breakout above this area here. I don't want to go and force the trade, though, and I feel like I'd be forcing the trade. So if I move down to the 15-minute chart, what do I have? Well, this little area here was a really nice reversal off the 15-minute, but it's been used up, right? So I can't use this again. And there's nothing in here off of that other move. So the one place that I will go is to right here. And right down here, I think, could be a little reversal point. So what we have in there is I've got a wick over wick area combined with a little sideways price action. So those two together before this move up. That's really what I'm looking at. In the Canadian dollar, so in the Canadian, we had from a long time ago, and frankly, I did not extend it, we had a potential breakout long. So if one is so inclined, you could take that breakout above this region, since we have now broken out above this long. And I think that we could get a decent run out of it. This one we had as a potential breakout, and it just never broke, and we did get the break overnight. Now, the thing about it is that your stop would have to be below this area here. And so it's going to kind of continue its run from this point, or we'll get stopped out. We'll see on that one a little bit later. Last, certainly not least, Great British Pound, Japanese yen, nat gas, and copper. So nat gas is bouncing off of its buy area, so we're getting a little bit of a run off of our nat gas level. So keep that area in mind. You may want to manage your stop accordingly, since we didn't get a great arrival into this area. But this one is bouncing off of that little area. Great British Pound still didn't meet our entry, and I'm still holding off, waiting on it. Same thing with the Japanese yen. Japanese yen hasn't come back to our entry. Last week we had a really nice short off of this breakdown, and so that one was a nice profitable trade. So we could see a reversal back into this level, but I actually like the level above it better. We spent a little less time in it. And then copper, we are rallying pretty hard in copper. Here's our potential selling area up above us. If you are if you're willing to take the risk, I think that you may get a decent little reversal opportunity right here off of this latest rally. It's a very small window, small margin for error inside of here. So our 4 levels that we had talked about today that are still up and running are the NQ, the bonds, Canadian, and nat gas, and then our stop out would have been gold. Although I say stop out because many of you may have taken profits early and actually closed it out for a small profit. So it really depends on your trade management on what you did on that one. For those of you that are Traders Army subscribers, we're going to have our next live trading room Thursday morning, bright and early. For those of you that are not Traders Army subscribers, go to tradersarmy.com to learn a bit more about our live trading rooms where we are looking at trades, and we look at a little bit more than these 12. We also then go into individual options trades on some individual equities a little bit deeper. So thanks so much, everybody. If you have any questions, please send me an email. We'll see you soon.